Hillary Clinton's stealth attack on the investor class and corporate balance sheets continues. And here's the thing. Ironically, I do agree with her comment that, quote, tyranny of today's earnings reports. Listen, I've griped about that stuff for years, but the fact of the matter is that this whole thing she's talked about today has nothing to do about corporate America creating jobs. What it does do, though, is remove the prerogatives of individual investors. Now, here's the problem. The average holding period for stocks, look at this chart, guys. It is really abysmal. Listen, I deal with individual investors on a day-to-day basis, and I can tell you when stocks are down and when things aren't right, the pressure to bail out is unbearable. So what you've got now is that the average hold time used to be 6 years. Now it's less than 6 months. But the fact is that as more individual investors have gotten into this market, stocks, the emotional part of it, have become a reflection of Main Street angst. Rich people, they can relax. You know, they do have the comfort. They can hold, they can ride out these waves, the ups and downs. The average investor does not have that luxury. So the question is, would higher capital gains actually help or hurt the stock market? Joining us now, Hilary, Kramer, A&G Capital CIO, and, of course, Tammy Bruce, Fox News political contributors. Ladies, you guys saw the Hillary Clinton piece today. Yep. It was a rambling, weird, you know. If nothing else, she better talk to Donald Trump, at least I'm pumping up the crowd, okay? I don't want to digress too much, but I almost fell asleep except for the subject matter. It is very, very important. It is very critical. This attack on free markets, how companies spend their money, and how investors trade the market is scary stuff, Hilary.
I agree. Hillary Clinton, she is throwing red meat to what's an ignorant left wing. That's what she's doing. To investors that don't understand that what she's talking about, raising capital gains, what it will do, Charles, is it's going to stop people from investing as much as they did. And therefore, she wants more taxes. There's actually going to be less taxes in the coffers. This creates disincentive in the market. And for Hillary Clinton to say that looking at the short term and companies need to think about the long term, look, there are biotechs that do very well, and they never have any earnings for a number of quarters in a row.
Not just biotechs. I mean, listen, you know, of all days to kind of complain about that, you know, the day that companies like Starbucks and Amazon hit all-time highs, we know people who lost money in those stocks within the last year. People buy and sell stocks. That is the prerogative of a free nation. And by the way, her short-termism is 2 years. So she wants to punish you if you have the gall to take a profit in the stock market within a 2-year period, Tammy.
You know, maybe she got all excited with what China's been doing, and she thought if they can do it, we can
why
do
not?
It, right? Now, look, I was speaking with Susan Solovic, who's in the green room. You're going to have it on your show a little later on. She made an excellent point. The angel investors for smaller companies like to get in and want to move out somewhat quickly because these are unknown entities. You're going to harm that.
But I do want to jump in because Hillary Clinton was interesting today. She protected those who have given her a lot of money. People who paid her $400,000 for speeches. Silicon Valley. She actually praised Silicon Valley. She praised some. So I find that the ironic point. So she's not angry at the angel investors or the big pocket investors.
Point that the people that are going to be harmed first are women and people of color who start up the most small businesses in this country.
I think everyone's going to be hurt, though, Tammy. Here's the thing, though. Again, she's talking about individual investors. Someone bought Amazon 4 months ago. They're up to 170 points at the open this morning, afraid to sell because they don't want to pay a higher tax rate. I've seen this personally. I've seen people lose fortunes because if they held it another month, it would be a lower tax rate. And guess what happened between that time? The stock, all those gains vanished. But it's just, to me, you know, and that's why I compare it to communism and what they're doing over there. And I think it's a valid point. But she's taking on the structures of capitalism, the foundations of capitalism, and saying she's going to change them. She brought up investing and micromanage them. She brought up the virtues of investing in a Solyndra, those kind of things. She had the nerve to bring that up today, but would chide someone for buying Facebook and having the audacity to make money on it.
No, Hillary Clinton is just misguiding everyone who is listening to what she is saying. Also, on these buybacks, Charles, because she went after buybacks. Yeah, some buybacks are bad. You don't want companies to buy back stock.
I don't know that. Let's talk about buybacks a little bit later because we are going to talk about that. I think it's up to, if you've got the money, whether you're CEO of a company or the person who wants to invest his or her money, it's your prerogative. It's not up to Hillary Clinton how you invest.